The fixed rate mortgage cliff. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's check out this article talking about the fixed rate mortgage cliff. Now what this is when those of us that locked in at low rates, probably below 2% because, well, we've lived long enough to know we'll probably never see rates that low again. And we kind of didn't trust the Reserve Bank when they said rates wouldn't rise until 2024. When we're coming off those rates, there's going to be a big hit to our repayments. We're going to have to, essentially a 50% increase for most people in their repayments, if not more. So let's have a look at this because, well, here's the thing. There's going to be a lot of fear put about it. And, well, I want to put one argument to you. You know, the RBA, dire mortgage warning as 1 in 5 face the fixed rate cliff. Now, remember the interest-only cliff? That materialized into nothing, and there was a lot of fear going on around that. The media will always focus on the negative, particularly with housing and property, because it's Australia, okay? And this is our state religion and our national sport is housing. So the RBA, Governor Philip Lowe, warned mortgage payments could reach a record high by next year. The mortgage pain being felt by millions of Aussies is not over yet, with the Reserve Bank of Australia, RBA Governor, warning payments could reach a record high by next year. This comes as 1 in 5 mortgage holders are about to fall off their fixed rate over the next couple of months, with their new rate likely to skyrocket. Now, how many of those people are part of the FOMO period? And what I mean by that is, one of the 9 things I'm talking about with regards to the housing sector not collapsing or prices not crashing as some are hoping, is what I call the FOMO impact, is the people who bought during the mania. I'm trying to figure out how many of these mortgage cliff people are like me, old semi-boomers who bought a house a decade ago and locked in just to get a cheap rate. So coming off the cliff, going back to paying normal money means, okay, you know, it sucks. I got to pay more money on my mortgage, but that's just part of life. It's going to be closer to what we used to in the past. To how many of those that only were able to buy during the mania period because they took advantage of the low rates and the lock-in? And those are the ones that could be really in trouble. I think what we'll see is all of us are going to make changes to our discretionary spending, but how many of them are going to be on the edge that barely got in just because of those low rates? And if we have a look here, of the dwellings that changed hands in 2021, it was only 600,000 out of 10.5 million. And if we count the 10,000, the 2% loaners, the 2% depositors as the ones probably at most at risk, there's only 10,000 of those. So while our government, likes to copy America in many things, we haven't gone as stupid as the Yanks have, with their pretty much giving anyone with a pulse a loan to buy a house, and which led to their housing crisis. So that's one good thing there. One thing I'm really, really happy about. So how much of an impact will this mortgage cliff have? Because I can't figure it out. I can't find the data. If you know where we can get it, guys, if we can find out how many of these fixed rate mortgages are new mortgages or old mortgages, as in how long the house has been in that person's name before they refinanced, let me know in the comments, guys, because I honestly think that's an important factor that we need to take account of. So, because how many people are like me that, okay, I've got more money. Well, I'm probably a special case because we're putting all our money in our renovations now. So that's where the impact of our discretionary spending is going to disappear once, hopefully, touch wood, we'll be back in our house and everything will be sorted by then. Touch wood a lot, touching wood. The people who have are the people who are locking in at these lower rates, are they the types that are going out and pissing the money away on restaurants? Or are they, Scrooge McDuck making extra payments on their mortgages, attacking other debt or investing it? What's going to be felt more? So new data from Aussie Home Loans revealed more than half, 50.22% of fixed rates would expire in September this year, when they would see the full impact of the past 10 rate increases. Governor Philip Lowe acknowledged the problem when he spoke at the National Press Club on Wednesday, the day after the central bank decided to keep interest rates on hold for April. The 35% of homeowner or households with a mortgage are experiencing or will experience a significant increase in their repayments, required payments, Lowe said. This increase in mortgage rates has had a significant effect on household budgets, and we anticipate that required mortgage payments will reach a new record high of almost 10% in household disposable income by the end of next year. I mean, one advantage we have is we're paying a mortgage and we're paying rent right now. So I want to not be paying rent anymore by the time our mortgage kicks back into normal. And there you go. That's where the rent will go. So we won't feel any difference. It's gonna suck either way, isn't it? So what to do if your fixed rate is coming to an end? Aussie Home Loans has urged homeowners to consider refinancing. Now, the problem is, if your LVR, your loan-to-value ratio, is down the toilet, you may not be able to refinance. You may not be able to get a better deal. No other bank may want to touch you. That's the risk. Mortgage brokers have, on average, been able to help households with a 0.68% reduction over the past quarter. The current average home loan interest rate is 5.82% on a mortgage of $500,000. The difference could equate to a monthly saving of $202, a yearly saving of $2,354, and a lifelong difference of $60,851. Just as households review their daily budgets and utilities in order to save on the family's bottom line, refinancing is just as, if not more important, to regularly revise. Aussie Home Loans Chief Distribution Officer Brad Cram said, "Your home loan interest rate should never be a set-and-forget option. It can be one of the most effective tools for homeowners to help reduce their financial burden and achieve greater financial stability." So there we have it, guys. Let's have a bit of a talk about this one. So is this... What I think the biggest thing with this mortgage cliff will be, it will hit discretionary spending for a lot of people. We saw that in the previous article we looked at tonight, which was the financial couple where the media tried to paint them as struggling in this article from news.com.au. And they neglected to mention certain things which were covered in the Fin Review article, like that $400,000, the variable part of their $2 million mortgage, they'd already paid off in a couple of years. The interesting thing in that article was the lifestyle changes that family were making. No overseas holidays. They had to shop at Aldi, slum it like the rest of us, sell the extra luxury car. That's what this cliff is going to be. You're going to see it manifest in discretionary spending. Okay, now if a lot of you watching this are already cheap bastards like me, and discretionary spending for you is like buying the 2 tins of Aldi cheap-ass coffee instead of 1 and making it go a little bit extra, you're probably not going to make a big dent on the economy. But it's going to be the people out there who are, well, living the high life, and reality will hit. We'll see it manifest in retail spending. So that's what we got to watch there. I don't know if it's going to lead to a huge calamitous crash in property, not like some people on the sidelines are waiting. I can't see it, guys. As always, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one. Check out HeiseBim and Heise Does. And if you're a fan and enjoy the content I create here, you can support us on YouTube or Patreon. Use our referral links, buy our pocket squares, or call us if you need an architect. Take care, guys. Have a great day. I'll see you in the next episode of HeiseSays. Bye for now.